Now, the sharp drop in prices in New York and then almost everywhere else around the world over the last day has left many people wondering, is the 8-year-long party for US equities coming to an end? Well, this is how the main US stock gauge, the S&P 500, did on Tuesday. The index fell around 1.25%. One of the main reasons for that, of course, are the growing worries that US President Donald Trump may not be able to deliver on his promise to provide a massive stimulus to the American economy. That has had a knock-on effect around the world. Share prices in London, Paris and in Frankfurt all taking a hit of between 0.5% and 0.8% yesterday. Meanwhile, Japanese stocks falling by more than 2%. Let's go back to the US, though, and if we look at how stocks there have performed since the end of the financial crisis, you can see that massive run-up. In fact, this is the second longest bull run in US history, and that's a 250% rise. If you'd invested in the best performing stock back then in 2009, something called Corp, a biopharmaceutical company, you would be very rich. A $1,000 investment in the company back then would now be worth nearly $60,000 today. That is an annual return of nearly 740%. But what if you weren't in the stock market and were relying on your wages alone to grow? Well, on average, private sector wages in the US have grown by just under 3% a year over that time. For more on this, Jeffrey Tucker joins me now live from Atlanta in Georgia in the US. He's an economics writer and director of the Foundation for Economic Education. Jeffrey, thank you ever so much for being with Money Talks again. Let's start with that rally that we've been seeing over the last 8 years. And now that we've hit this point, which seems to be looking like an inflection point, are we peering over the edge of a cliff here?
Well, you recall that during the election, Donald Trump quite frequently referred to the stock market bubble. He said it was an artificial bubble and it was destined to collapse. And then after he was elected, now he's been pointing to the high markets as being evidence of his own success and the bullishness towards his presidency. So, he swings both ways on this. Look, the market was long overdue for a correction. It's been absolutely crazy, fueled largely by easy money, and as you pointed out, it's not been backed by a growth in the real economy. It's mostly been a financial phenomenon, like an asset inflation. So it's long overdue. Why now? It might have something to do with the growing wariness that Donald Trump's promise of deregulation and tax cuts is not going to happen.
Yeah.
He seems to be weakening politically. And if you look at the reform plan that he's backed on healthcare, it is not a good plan. It's just a refurbishment of the existing highly regulated, highly structured healthcare plan that was already in place that he promised to repeal.
Right.
He's not doing it.
Right.
He's not doing it.
All of this points to a picture that perhaps means that the US equity market is incredibly vulnerable right now.
It is, especially with rising rates. You've got the Fed now doing its best. I do not envy their position right now. They're trying their best to raise rates a little bit at a time without scaring markets. But, there's going to be a drain from the stock market to the bond market. I mean, that's just what's going to happen with rising rates.
Also, looking at it from a valuation point of view, if we're looking at price to earnings ratios, for example, US equities are looking phenomenally expensive, aren't they?
Just absolutely outrageous, and I don't believe it's sustainable. This could be the beginning of the end, or it might wait a little bit longer. But look, the only way we're going to be able to forestall a really downward push and some of these astronomically high markets is through some dramatic policy changes. And I mean, huge tax reforms, big deregulation, and a greater emphasis on globalization and free trade. And as we know, that latter point doesn't seem possible right now. And it doesn't seem like the much hoped for deregulation and tax reforms are going to happen anytime soon.
Jeffrey Tucker in Atlanta in Georgia, thank you very much indeed for joining us on Money Talks.